Hey, what's up, guys? It's me, John the House Guy. I have had a great opportunity in the last couple weeks to talk to two brand new real estate investors, people who are just starting out. They're looking for some guidance, they don't know what to do. And I found myself in that process telling them both the same thing. And so I thought, well, that would probably make a great video to put out just to give people some information on um, what I tell first time investors. So the first thing I tell people is, what you want to do is decide what avenue you want to go down. Do you want to be completely passive? Do you want to be somewhat active or very active? Are you looking to make an income for retirement? Are you looking to replace an income for changing your career? Or are you looking to do this as a full-time job? Because all those things make a difference in which route you're going. But regardless of any of that, you got to be thinking about that and know what you're doing. But I tell them the first thing I recommend is to read this book, Rich Dad, Poor Dad by Robert Kiyosaki. It will change your mindset about money. The first thing this book teaches us is the rich don't work for money. They don't. You will not be able to, even if you have a good job, if you have if you went to college and you've got a degree and you're working in the field that you chose and you have a good job, working and saving by the hour, trading your time for money will never make you rich. It won't. You say, well, what about pro athletes and things like that? Yeah, okay. Those are very, very rare exceptions, one in a million kind of things. But for the most part, most of us, average Joes and Janes, working for an hourly wage or a salary is not going to make you rich. You've got to figure out a way to take that money that you're making and invest it and buy something that is going to pay you to own it. And real estate is one of those things that does that. If you're looking at Rich Dad, Poor Dad, the first lesson is the rich don't work for money, they let money work for them. You want to put your money into an asset that pays you every month, and you want to limit your liabilities. That's money that's taking money out of your pocket every month. So when you start thinking about investments, real estate is really one of the most tried and true ways to create wealth for your family. The next step, you read that book, you start getting your mind shift, you start thinking about how active or passive you want to be. The next thing you want to do is go and talk to a lender. You want to talk to somebody and just find out, hey, what are the products that are available to me? I have X number of dollars in the bank that I can invest. You're going to have some money to invest. There's situations where you can do it with low money down or no money down even, they say, but for the most part, you're going to have some kind of cash to get started in this business. You're going to be required to make a down payment. You're going to have to pay for repairs, that kind of stuff. So let's just take flipping, for instance. A lot of people think, well, I want to flip houses. That's really what I want to get into. Okay. Well, you need to figure out your money situation. Are you going to pay for all that with cash? No, probably not. You're going to be looking for a loan. Well, the bank is not going to loan you more than a house is worth. They're just not going to do it. It doesn't make sense for them financially if you fail and they take back a product that they can't sell and get their money back, then they are losing money, and they're not in the business of losing money. So you got to be thinking about, okay, what is my strategy, right? So if you're looking at buying a rental property, you're going to need probably 20% down to buy that rental property. So 20% of $100,000 is $20,000, right? So then you say, well, I only have $10,000. Well, then we need to be looking at $50,000 properties and try to buy you something that makes sense from a cash flow perspective. Now you say, well, what good is that going to do me? That ain't going to change anything. I'll make $100 a month on this $50,000 rental property. Yes, but you got to start somewhere. And what I told people, both of those people this week, you got to start somewhere, buy something, and then when you get it rented and you have it stabilized and you're using that property, let every dime you make go towards paying that property down. Because what happens is after you pay that property down and the appreciation over the years takes the property value up, you can borrow against that asset. So now you're able to, let's just say you bought a $50,000 house and you're renting it out for $600 a month. And every month you're paying a couple $100 down on the mortgage, and the renter is paying that. You're not paying it, the renter's paying it. So you do that for 2 years, and you think, well, 2 years is a long time. It is, but you got to start somewhere. And over 2 years, the property value goes up, say 5-6%, right? So now you've got, a $55,000-$60,000 house, and the renter has paid down the balance another $10,000. So you got a little money in between those two numbers. You go back to the bank, you refinance, you pull your money out, leave the renter in place. He's still paying enough, or she's still paying enough to pay the bill, and you go buy another one. And you use your properties to fund your real estate growth. And over the course of time, you'll find that when you have 2 rents and you're paying down those bills, it goes a lot quicker. When you have 5 rents, it goes down a lot quicker. When you have 10, it goes down a lot quicker. And then that's the way you get that snowball rolling. It's almost like a reverse Dave Ramsey snowball, right? Like you're taking on debt, and you're building ownership in what you own. Now, a lot of people say, "Well, I don't want to be, in huge amounts of debt." Well, that's part of what you have to do in this business, and what rich people understand is that debt is more powerful than the dollar, right? Because what we're seeing right now is the dollar is going up. We're having, or the value of the dollar is going down. We're having inflation. The dollar amount to spend is going up. Well, real estate is going to track with inflation. So it's going to go up to a certain degree. It's going to continue to appreciate for the most part. That's, there's always exceptions, but if you look at that and then you look at the amount of debt, your debt is going to stay the same. Or if you have a renter in there, your debt is going to go down over time. So your debt is reducing, your value is going up, and the difference between those two numbers is where you make your money. So the more debt and the more property you can own, the more wealth you can acquire. The next thing I tell people is, once you've got a lender, you talk to them and you say, hey, look, here's how much money I have. How much of a loan can I get? Then you decide, okay, am I going to just go out and buy a long-term rental property? Am I going to go out and buy a vacation rental property? You may be in a position where you want to buy something at the beach or something in the mountains or whatever. Those tend to cash flow a lot better if you manage them yourself. Now, if you're putting them under management with a company, you don't expect them to make money. But if you're managing them yourself, you can make a substantial income from those properties. You could also go the owner finance route. You could buy houses and owner finance them back. That kind of limits your liability as far as the repairs, the insurance, all that. You have them to pay, those kind of things. You could buy commercial properties. You could buy land. You could do all sorts of different investments. It's just a matter of what you're most comfortable with. If you want to be a very active investor, I would say buy an Airbnb property. Buy something that you're going to be dealing with on a daily or weekly basis, with people messaging you and booking, and you have to get the cleaners in and change it out and all that. If you're looking for something like that would be the route. You make more money that way. The more active you are, typically the more money you're going to make. If you're looking for something completely passive, buy a rental property, a long-term rental property, put it on a property management company that's typically going to take about 10% of the gross, right? So if you're renting it out for $600, you're giving them $60, and then they're handling the tenants, they're handling the repairs and all that kind of stuff. Now, they don't pay for the repairs. When the time comes that the ceiling fan breaks and you need it fixed, they're going to tell you, hey, we need a new ceiling fan at XYZ Main Street. It's going to cost about $300, and you'll say, okay, go ahead, we got to do it. And then they'll take that money out of your money every month. That's completely passive, right? Like, don't call me unless there's something that costs more than $500, put the money in the bank. The more passive you are, the less financial return there is, right? So if you're looking for owning something long-term just as a retirement, I'm going to sell it when I get to be 65 and take the money and that, or I'm going to sell it when my kid gets ready to go to college and pay for their college with that. That's the route you could choose, right? But if you're looking to replace a career or change jobs, or have some financial freedom that allows you to spend more time with your family or whatever it is, then you're going to have to probably take a more active route and deal with some things yourself. So those are my things that I told both of those clients. The biggest thing to me is don't just gather information. Once you have a clear plan and you know what you want to do, you have to take action, right? You can't just wait and decide, oh, okay, well, I'm going to read some more about it. I have those people that I'm telling you about. One is already taking action. That person is going out, decided the route they wanted to go. She decided she wanted to be a flipper. So she's going to flip. She's got the funding to do the flip. She's going to go out. She's got a house under contract already, and she's ready to go as a flipper. Now, this other person that I talked to them probably a week or two later, and they've just finished reading the book. So they took action. They got the book. They're ready to go. If I tell you all these things and you don't do anything with it, then nothing's going to happen, right? If you don't take action, nothing is going to change. So you have to be the one. It's just like I know for a fact that I am overweight, right? Y'all are shocked. I know. I know what to do to fix it. But if I don't go and do it, I'm going to remain overweight. Period. End of discussion. I have to take action to change it, right? Everybody knows that in order to do something, you have to set a goal and then take action towards that goal. So if your goal is to own investment property, if your goal is to be involved in real estate as a passive or active investment, let me know. Drop me a comment down below. Send me a message on Facebook. I'll be glad to help you any way I can. I'll be glad to tell you all the information that I have in my brain, share with you book recommendations, help you get going down this path, because I believe in it so very much that it is the path to financial freedom. And I've seen it play out, and I've seen what it's done for me, and I've seen what it's done for other people that I've helped as clients. And I'm just telling you, it's a real thing. It's not something you just see on TV. So if you decide that you want to take action or you need help with it, just get in touch with me. I'll be glad to help you any way I can. There's a ton of information on Facebook. There's a ton of information on biggerpockets.com. It's a real estate investment social media platform, and the real estate podcast is another thing that I would recommend. The Bigger Pockets podcast, I would 100% recommend that. And just listen to soak up as much information as you can. And then if you have questions for me, reach out to me and I'll be glad to help. Hope you have a good day. Hope some of this information helps you. Thanks so much. God bless.